Hey everyone, welcome back to Corporate Decoder, the place where we unpack the secrets buried in company filings. And tonight we have Exxon Mobil's latest report, and let me tell you, it's a doozy, and it's all about their second quarter results for 2025. Alright, so Exxon Mobil, one of the biggest names in energy, just dropped their second quarter results for 2025, and we're diving deep into what it all means for them and for us. Let's get straight to the juicy bits. First off, the date here is August 1, 2025, which tells us they're right on time with their reporting for the second quarter. Now they've included a bunch of information here, but what really matters are the specifics of their financial performance. This part here lists the company's securities registered on the stock exchange. We see their common stock under the ticker XOM and various notes they've issued, like the 0.524% notes due 2025. This is important because it shows us how they're financing their operations and different projects. The main event today is under item 202, results of operations and financial condition, and item 7.01, regulation FD disclosure. This means they are releasing important financial information and making sure everyone gets it at the same time. Exxon Mobil put out a news release on August 1, 2025, detailing their second quarter 2025 results. They also provided supporting data in a document called the 2Q25 Investor Relations Data Summary. Think of these as the official score sheet for their performance over the last 3 months. Now let's talk numbers. We see a lot of figures like 0.00000000000003 forwarded financial value. While the exact nature of this number isn't immediately clear from this snippet, we can infer it's a significant financial metric they're reporting. In a filing like this, without the attached financial statements, it's tough to give precise figures for revenue or profit, but these numbers are the building blocks of their financial health. This entry, a CORP common stock member, refers to their common stock. This is what most investors own. They represent a piece of ownership in Exxon Mobil. And here, some 0.524% notes due 2028. Member tells us about a specific debt they owe. They borrowed money and will pay it back by 2028 with an interest rate of 0 volt money. Similarly, some 0.524% notes due 2032. Member signifies another debt obligation. This one is for their 0.524% notes due in 2032. Having different debt maturities helps them manage their cash flow over time. Then we have each own L 1.40% notes due 2039 member. This refers to their notes that mature in 2039 with an interest rate of 148%. Again, a moderate interest rate showing they are strategically managing their long-term financing. And finally, the signature block with Kieslyn M. Fox as Vice President Controller and Tax. It reassures us that this report has been officially submitted and certified by key financial officers of the company. Len M. Fox is basically saying, yeah, these are our numbers and we stand by them. So what does this all mean in the broader picture? We're looking at a company that's actively managing its debt by issuing notes with varying maturity dates and interest rates. This is standard practice for large corporations to ensure they have consistent access to capital and can manage their financial obligations effectively. However, without the actual financial statements, we can't see the revenue or profit figures. We know that the energy sector is complex and influenced by many global factors. Exxon Mobil's performance here is likely tied to oil and gas prices, geopolitical events, and their own operational efficiency. The fact that they are reporting specific note issuances and having them managed by a controller signals a company that is financially disciplined. For investors, this kind of information is crucial to understand the company's financial footing and its long-term strategy. It tells us they are actively engaging with the debt markets to fund their operations and growth. It's not the whole story, of course, but it's a vital piece of the puzzle. Now, looking at these results more broadly, Exxon Mobil is a giant in the energy sector. Their strategy generally involves large-scale exploration, production, and refining of oil and gas. They need to constantly invest in new projects to replace declining reserves, and this often involves significant borrowing or equity issuance. The interest rates on the notes mentioned, like that 0.524% and 1.4224% and 1.4424% and 1.424% and 1.424, this is a strength. However, the energy sector itself faces risks like fluctuating commodity prices, environmental regulations, and the transition to renewable energy sources. Exxon Mobil's ability to adapt to these challenges will be key to its future success. They are a company that needs massive capital investment, and managing that capital efficiently through debt and equity is paramount. This filing highlights their use of debt to finance their vast operations. It's a sign of stability, but also of reliance on debt. The low interest rates are a positive indicator of their finance. Alright, that's our quick decode of this Exxon Mobil filing. What's your take on these numbers and what they signal for the company's future? Are you an Exxon Mobil investor? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.